Hello, it's Chew Dog Charts. The majority of Berkshire Hathaway's stock portfolio was hand-selected by CEO Warren Buffett himself. This is especially true of the portfolio's largest stock positions. With that in mind, here are Berkshire's 10 largest positions according to the latest information available and why Warren Buffett might like each position. And lastly, we'll take an in-depth look at Berkshire's best performer in 2017, and I think you'll be surprised. Let's take a look. Number 1 is Kraft Heinz. Berkshire's $25.5 billion, 325.6 million share Kraft Heinz position is a result of the merger of Heinz, which Berkshire owned, with Kraft Foods. Berkshire's stake represents 26.7% ownership of the combined operation. Buffett is likely a fan of the synergies created by combining two giant food companies, as well as the portfolio of high-valued brand names owned by Kraft Heinz, including Oscar Mayer, Maxwell House, and Lunchables. Number 2 is Wells Fargo, which remains one of Berkshire's largest stock positions even after the infamous fake accounts scandal. With 464.2 million shares worth about $27.5 billion, Berkshire owns about 9% of Wells Fargo. Berkshire has actually reduced its position in recent quarters, but this was more of a regulatory compliance issue. Despite the numerous scandals plaguing Wells Fargo, Buffett has called Wells Fargo an incredible institution and says that it is still a good long-term investment. Number 3 is Apple, which is a relatively new addition to Berkshire's portfolio as the position has been built up within the past 2 years. As of the end of the third quarter 2017, Berkshire owned about 134.1 million shares of Apple with a market value of about $22.7 billion. And Buffett has stated that Apple has a fantastic balance sheet, one of the world's most valuable brand names, and has extremely sticky products, which means that Apple customers tend to remain Apple customers. Number 4 is Coca-Cola, a longtime Buffett favorite both as an investment and as a product. The 400 million shares in Berkshire's portfolio are worth about $18.1 billion. Coca-Cola has numerous competitive advantages that Buffett loves. To name a few, the company's world-famous brand gives it pricing power, and its vast distribution network gives it cost advantages unmatched by competition. Plus, the business is easy to understand and easy to run. Number 5 is Bank of America. While Bank of America is technically the newest addition to Berkshire's stock portfolio, it's important to mention that Buffett actually invested in the bank several years ago. However, the original investment was in the form of preferred stock and warrants to buy common stock. These were recently exercised. Berkshire now owns 679 million shares of Bank of America worth about $19.7 billion. I couldn't find a quote on why he wanted to own Bank of America. All I can conclude is that Warren Buffett likes money. Number 6 is American Express, a longtime Buffett favorite. Berkshire currently owns 151.6 million shares of the credit card giant with a total market value of about $14.9 billion. American Express has a valuable brand, an affluent cardholder base that gives it pricing power over its rivals, and a closed-loop payment network that allows it to profit from transaction fees as well as interest on balances. Number 7 is Phillips 66, which is Buffett's largest energy bet. With 80.7 million shares worth about $8.1 billion, Berkshire owns nearly 16% of Phillips 66. Unlike many oil companies, Phillips 66 is a downstream operator, meaning it makes its money by refining, marketing, and processing petroleum products. Because of this, its profits are not dependent on the price of crude oil, which has allowed the company to thrive even as oil prices have remained depressed for several years. Number 8 is International Business Machines, which was a much larger position in Berkshire's portfolio until recently. Over the past couple of years, Berkshire has chosen to reduce its exposure to IBM from 81 million shares just a couple of years ago to 37 million shares recently. Still, with a market value of about 5.7 billion, Berkshire's stake in IBM remains one of its biggest. While Buffett likes IBM's business model and the high switching costs incurred by its customers, competition in the industry has heated up, and Buffett has reportedly revalued the stock downward. Number 9 is U.S. Bancorp, and by now you may have noticed that Buffett likes banks. The fourth financial stock in Berkshire's holding makes up 4.7 billion of Berkshire's portfolio value with about 85.1 million shares. There's not much to dislike about U.S. Bancorp. The bank has a well-established track record of smart risk management, which has allowed it to emerge from the financial crisis even stronger than it went in. Coming in at number 10 is Moody's, which happens to be Berkshire's top performing stock in 2017. Berkshire owns about 24.7 million shares worth about 3.8 billion and representing a 12.9% stake in the company. Buffett loves the high barriers to entry in Moody's business, which have resulted in few competitors and strong pricing power. Now, Moody's was up 59% this year, surpassing any other large holding that Berkshire has. Buffett has owned Moody's for decades. He toughed out a major drawdown in 2008 and was rewarded with a huge rebound since, a rebound of about 870%. It took improved earnings and a tripling of the PE to accomplish this feat. Let's take a closer look at the price chart. We're looking at the 20-year monthly chart on Moody's Corporation, and the symbol is MCO. As we can see here, the bottom was in 2009 with a relatively smooth ride up through mid-2015, consolidation here early 2016, bouncing off of the 50 EMA and then on its way up. Looking at the MACD, we also show the bottom here, and then the consolidation here in 2016 with the fast line crossing through the trigger line early 2017 and accelerating up through today. That is also reflected here in the histogram, as we can see. Moving into the momentum indicator, the consolidation here 2016 with a strong move up to the current time frame. Moving into the price rate of change, we also show consolidation and then a strong move. That as well in the relative strength shows much the same. We're at a lofty 90.22 level here, above 80, which is in overbought territory. That overbought territory is also shown in the stochastic, again above 80. The volume has been moderate, but no concerns. Into the Williams. The Williams shows the bottom here, and then a nice strong move through the current time frame. Moving back up into the price chart, I just want to disclose I do not hold any position in Moody's at this time, and I'm not necessarily recommending buying Moody's at this time either. It's simply a very nice chart to take a look at and admire. So for now, that's Chew Dog Charts. Thank you.